So this year we ended up owing the government over $500 on our tax return.
Ouch!
In this video, we're going to share a few reasons why this happened, as well as one simple thing that you can do to help make sure it doesn't happen to you. What's going on, y'all? Colin and AJ here with Marriage Inside Out. So since we've been married, we always have filed our taxes jointly, and typically we receive a refund, which has been nice. But this year, that was not the case. We were caught a little bit by surprise. So we figured we'd be transparent and share with you all why it happened and how you can hopefully avoid it yourselves. Because let's be honest, this is something that you didn't learn in school, and you're probably not going to be taught this during a premarital counseling course, or surely not when you're on the altar about to say I do. But it's important.
Right. So whether you're married or single, we strongly believe that this will apply to you.
So here are some reasons why we ended up owing money on our tax return. So the first reason is that we both had increases in salary in our 9-to-5 jobs. So I ended up getting a raise this year from my job, which, hey, praise the Lord, I was grateful for. And Adrian also received an increase in salary from a job change. This led to a pretty big bump in our income for the year.
Second, we earned more income from our side business. While it was still a nominal in the big scheme of things increase, money is still money, and making more money means more taxes. So that was another contribution.
Yeah. And the third reason is that we received more income from our investments, specifically our stock and index fund investments. So we had dividends from some of our stocks, and also we received money from stocks that we sold. This is also known as capital gains. So that was something that we accrued over the course of the year, which again led to another bump in income.
And last, we are dinks. If you haven't heard of the term before, that is dual income, no kids. Currently. So because this is our current phase of life, we do not have children to count as dependents. With no dependents, we can't get that deduction.
Let's just be real. Some of y'all watching this probably had children just so you could claim them on your taxes, but that's all right. We ain't gonna judge. We ain't gonna tell nobody. I'm just playing.
So how can you avoid owing money on your tax return? A very simple thing you can do is to adjust the withholding on your W-4. Your withholding is that extra bit you choose to have taken out of each paycheck to account for your taxes. You can easily access your W-4 at any point during the year. If your company has a portal where you monitor all of your paychecks, etc., you can just go on there and adjust those withholdings. If not, reach out to your HR representative at your job, and they should be able to point you in the right direction. Typically, the more you withhold, the less taxes you owe. You can also use the IRS tax calculator, which is located on their website, to figure out how much you should be withholding.
And this was obviously something that we could have done and should have done, but I think just during the year we got so caught up and preoccupied with life and everything going on that we didn't take the time to look up and take note and consider it. But it's all right, sometimes it just happens.
Right, you learn and then you grow.
And you grow. And so 2 bonus tips that we want to share with you here that can hopefully help you avoid this situation is to first keep track of your deductible activities. If you're able to itemize your deductions to where they total what's greater than the standard deduction, that could work in your favor. Now this could be through your mortgage interest if you do own a home, or maybe you're paying back student loans, so you have student loan interest that you can deduct, or through your charitable donations, which, hey, it doesn't hurt to give a little extra during the year. It can really pay off in the long run.
Second bonus tip, if you have a side business, set some time aside quarterly to review your income stream and to set some extra money aside for tax season.
And so you may be watching this and think, yeah, all of this is good and fine, but I would rather have more of my money up front. I want to keep as much money from each paycheck as I possibly can. That's all fine. You can certainly do so. If that's the case, all you need to do is decrease the amount of money that you're withholding, or you can get rid of it altogether. Just keep in mind that you may end up owing some money when you do your taxes, so don't be surprised.
Ultimately, it's best to do what is best for you and your family in this season. Of course, you could withhold a whole bunch of money at the beginning, but then the government's hanging on to your stuff for the year. If you want to make sure that you have that money for investment, etc., it makes a lot of sense to go ahead and spread things out over the course of the year. At the end of the day, we encourage you to use your best judgment.
Now, when it comes to deductions, there are a lot of common ones out there, such as the ones that we mentioned in this video. However, there's one potentially major deduction that you could be missing out on, and it's actually something that a lot of people don't even think about when they do their taxes. To learn more about this deduction and how you can potentially benefit from it, click the video in the top right. To watch one of our other videos, click the one right below it. Thanks for tuning in, and we look forward to seeing you in the next video.
You learn and you grow.
And you grow. You better grow. You better.